So now we are at the chart. We are in the FDAX future in 10th of October, just finished. So we built a balanced day. So we have a classic or typical D profile, and now we wait or prepare for the next session. But for that, we need to wait for the open. Where is the open? In this case, the open is between the value area high and the VPOC. So we think that this balance is accepted, and that we will trade from value area high to value area low, or value area low to value area high. So those are the two price levels we are looking for trades. But first we need to stay in the value area range for more than 30 minutes. So first hour has passed, so we stayed in there. So the acceptance of the value area is very high. So we can also check smaller time frames if we find some setups on the value area low for long or on the value area high for short. Where will we go first? We are now at the value area low. We went quickly or shortly into price discovery, but now we can look for setups long. This was, by the way, the 8 o'clock or 8 a.m. market open. Now is the 9 a.m. market open. Depending on the volume, if there's above average volume at 8, you can also use the 8 a.m. open. Otherwise, we should wait for the 9 a.m. open. So now we try to trade the balance. So we look for a long trade on the bottom and check if the price moves to the upside. And yes, it does. First, it tests the bottom a second time, and then at some point it moves to the upside. So now at the upside of the previous day's value area, we will check for short trades. What will happen? We have a reaction at the value area high. We go into some price discovery, and we have the first closing above the value area high. So this is the first sign that we are going to go to price discovery, but it's spending a long time at the value area high. So it's the first sign that you can add the footprint or add the order book, but we will discuss that in later sections, and maybe look for long. But for now, it is still a short bias. We're looking for short trades. If there are short setups, we're going to take the short setups. So on the long setup on the bottom, we will take the stop loss above the maximum stop loss. That's the biggest one you can take, is the stop loss below the previous day low. But when we have a setup, for example, we have small P shapes, then of course we can minimize our risk or improve our risk to reward. But now we still look for short trades. What happens? Our short idea fails. Most likely we have been stopped out here because our max stop is on the previous day absolute high. Happens sometimes. You lose, it's part of trading. And now we can look or could check for a retest of the value area high, but this is one of the next setups we will go through.